Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Tariff talk and talk of a potential recession mean that the Federal Reserve will probably keep its interest rate cuts on hold, at least for now. The central bank is still expected to cut rate twice this year, but time will tell more. While the broader market dipping in and out of correction territory and consumer sentiment taking a hit, not all stocks are in the red. Dynex Capital Inc., traded on New York Stock Exchange under symbol DX, an internally managed mortgage real estate investment trust, or mREIT for short, is trading at its highest levels in 27 years. There have been concerns that the interest rate cut would harm mREITs, but those fears may be overblown. The Fed isn't cutting interest rate as quickly as many expected. Moreover, the U.S. housing market remains strong, and the average 30-year fixed mortgage rates remain near 7%. And this is all good news for mREITs like Dynex Capital. John?
Yeah, thanks, Mo. Dynex Capital Inc. is, as you noted, a mREIT that invests primarily in residential mortgage-backed securities, or RMBSs, commercial mortgage-backed securities, or CMBSs, and CMBS interest-only securities. The company's current portfolio is 98% agency RMBS. Now, the high concentration of RMBS investments helps provide it with a balanced income generation and capital preservation. And this is due in part to the fact that RMBS securities are backed by government-sponsored entities, which provides it with a level of security and stability.
How did it do in the fourth quarter?
For the fourth quarter ended December 31st, 2024, Dynex reported total economic return of 13 cents per share and 99 cents per share for the full year. Fourth quarter net income was 61 cents per share, and that's up from 38 cents per share in the fourth quarter of 2023. Full year net income was $1.50 per share, and that's a big improvement over the 2023 net loss of 25 cents per share. During the quarter, it raised equity capital of $64.4 million and raised total capital for 2024 of $332 million. Now, the average balance of interest earnings assets increased 36% during the year. Management noted that its shareholders earned a total shareholder return of 13.7% in 2024 and pretty impressive 27.4% over the last 2 years on their investment. And it's important to note that that actually came during a period of significant volatility and an inverted yield curve.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. I see that it's been increasing its monthly dividend.
Yeah, as an mREIT, Dynex has to legally distribute at least 90% of its taxable earnings to shareholders as dividends. Better still, unlike the vast majority of dividend stocks, the Dynex distributes payouts monthly, and that payout has been on the rise. In November, it increased its monthly distribution from 13 cents per share to 15 cents per share. For March of 2025, the company's board increased the monthly distribution again to 17 cents per share. And that works out to $2.04 per share on an annual basis for a massive dividend yield of 14.23%. And that's, for context, 500% higher than the current inflation rate of 2.82%. Now, the ultra-high yield isn't a result of a lower share price. The company's trailing dividend yield is 1.2%, and the 5-year average dividend yield is 11.41%.
Looking at the stock chart, DX shares are crushing the market.
Yeah, as of this recording, DX shares are doing exceptionally well, up 6.5% over the last month, 21% over the last 3 months, 20% over the last 6 months, and 33% year over year. Shareholders have been accustomed to this kind of performance. The company's reliable returns have been consistently outperforming the S&P 500 financials and the iShares Mortgage Real Estate Capped ETF, trades on the New York Stock Exchange under ticker REM, since 2008. Now, further out, since its June 1989 initial public offering, or IPO, DX stock has provided total returns, and that means dividends reinvested, of an almost incredible or unbelievable 12,286%.
John, thank you so much for your insights. Listed on the New York Stock Exchange in 1989, DX is the longest tenured mREIT on Wall Street. Over the years, it has provided investors with solid growth and reliable dividend. Dynex continued to deliver solid results last year while executing on a strategy to build a resilient and sustainable business. On the dividend and stock fronts, the company's disciplined investment process allowed Dynex to outperform its peers. Over the last 5 years, DX stock has returned total profits of 164% compared to just 88% from iShares Mortgage Real Estate Capped ETF. 134% from S&P 500 and slightly better than the 157% from the S&P 500 financials. Outperforming the market is what shareholders and institutions are looking for. And currently, 233 institutions hold 46.42% of all outstanding shares. The three biggest holders are BlackRock, Vanguard, and Geode Capital Management. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.